Good morning and welcome to the ADS Securities Markets Update. Beginning with the US and the Canadian data yesterday, the Canadian GDP figures came in with mixed outcomes, but also at the same time the economy is already in a recession as the quarter-over-quarter GDP posted the first back-to-back quarterly contraction since 2009, shrinking by 0.5% in Q2 of this year and also 0.8% in the first quarter of this year. On the other hand, the month-over-month GDP came in with much better than expected, rising by 0.5%, and the estimates were to rise only or to grow by only 0.2%, posting the first monthly growth after shrinking for 5 months in a row. Finally, the year-over-year advanced towards 0.6%, up from 0.5%. In the US, most of the data came in mixed, but at the same time, some of the data came in with disappointing figures. First of all, the ISM manufacturing PMI came in with a huge miss, declining toward 51.1 in August, down from 52.7 in July. But the estimates were to rise again to decline toward 52.5 only, and this is the lowest reading since May of 2013. Moreover, the exports also shrank for the third month in a row and also posting the lowest level since July of 2012, declining toward 46.5. We've seen also the new orders tumbling back toward also 51.7 to the lowest level since May of 2013. And finally, the employment components of the manufacturing sector in the US also eased back toward the lowest level in 4 months toward 51.2. Finally, the construction spending in the US increased by 0.7 in July compared to the same rate in June, and the estimates were to rise by 0.6%. This is better than expected, but leading some of the major banks to raise their Q3 GDP estimates by only 0.1%. But the next few days also should show more revisions ahead of many economic releases ahead. In Asia, there was one economic release from New Zealand as well today, which also came in with another disappointing figure. The Q2 GDP grew by only 0.2% compared to 0.9% in the first quarter of this year, while the estimates were to grow by at least of 0.4%. The year-over-year GDP also slowed down back toward 2%, down from 2.5%. As for the European session ahead, there are also a few economic releases from Spain, the UK and also the Eurozone, which may have a notable impact on the market ahead of the key data in the US. But we'll be watching the Spanish jobs report, the UK constructions PMI and the PPI in the Eurozone. As for the US session today, eyes will be again on the ADP non-farm employment change, which is set to rise or to add around 204,000 in August compared to 185,000 in July. And moreover, the factory orders also will be released today with an estimate to rise by 0.8% in July after rising by 1.8% in June. These are the fundamentals for today, but going quickly to some technicals and beginning with the US dollar index, which basically the index remains below its 200-day moving average and closed the day 100-day moving average and closed the day for the past 2 days well below that support, which keeps our bearish outlook in play for the time being. But today's ADP non-farm employment change also should be the catalyst or whether to break above that resistance or to continue with the downward pressure. On the downside view, traders should be watching the 200-day moving average on the daily chart, which stands at 94.97. As a breakthrough, that support may clear the way for further decline, for another decline, and also probably back toward last week lows, which is we're talking about 93, also 93.40s. Today, I'll be interested also to look at the euro dollar, or the euro against the dollar, which basically shows some positive signs, at least, as it weakened above its 200-day moving average also yesterday with a daily close well above that support, while technical indicators are also heavily oversold on the daily chart and started to rise again, which basically suggests a potential retracement to the upside ahead, especially that the trend line also on the daily chart, which basically remains intact. So will be interesting to see some sort of a retracement to the upside. But at the same time, the key resistance for the next key resistance stands at 1369, which is only the 38.2% retracement from the recent decline recently, which should be watched very carefully, as a break above that resistance should clear the way for further gains above almost or toward 1435, which also represents its 50% retracement from the latest high to the latest low. Finally, looking at the British pound, which unfortunately looks so weak. Yesterday we've seen it looking very weak, as it also closed the day yesterday below its 200-day moving average, and clearly for the past 2 days. In addition to that, also we formed, or the British pound formed, a bearish shooting star on the daily chart for the past 2 days, which suggests also another dip lower in the coming hours. However, the construction PMI from the UK today could be the catalyst for such an event, especially if it comes in with a negative surprise. But the next key resistance, or the next key support, basically stands at 152.48, which is here, and basically this is the 50% retracement from this year's lows at 45.66 toward also the this year's high, which is around 59.30. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow.